Hello, everybody. Welcome back to another 21st Century Renaissance and to another open interest newsletter breakdown. I'm your host, Dr. Michael LoPiano. Welcome back, everybody. I hope you enjoyed a Merry Christmas. Very nice to see everyone once again. Certainly a number of Christmas presents on their way. Thanks to Santa and some others, perhaps. Obviously, working from a new setup here. Hope you guys like it. Go ahead and leave me a comment if you appreciate the new setup. I certainly do. But of course, we did have, and still do have some interesting gifts to look at in our price action today. So today, right, going to be breaking down exactly maybe what was happening here with respect to this tweet, this X post we got from Roaring Kitty yesterday. Thinking about exactly what's driving this pretty dynamic price action we're looking at now. Of course, this is after market open. But thinking about, right, how this type of movement may have been something that was set up anyway. You'll remember that in Tuesday's article, I gestured to the possibility of this upward channel test as a way for dealers to set up a transition into a new macro trading bracket between, or box perhaps, if you will, right, between $30 and $35, and how that actual super bullish situation where we traded up to actually even higher than I thought we would go, right, just north of $34, actually might be something that would work in dealer favor. So we're going to think about that today. So let's hop right into it. Certainly, if you are new to the channel, if you're new to this particular breakdown, you will, and you'd like to have access to the article that I'm breaking down, right? I post these analytics every day, every trading day, that is, on X. You can find the link to today's article down in the description. If you're, of course, viewing this video on X, it is pinned at the top of the profile page. Yeah, so let's hop into this. Let's get this a little bit bigger here. There we go. Right. Okay. So today's title, upward channel test, setting up a reversal. Yes. Okay. Why would, interesting, right? Why would this very dynamic movement, this very quick dynamic movement actually be something that sets up something like a larger reversal? Why would that actually be something that dealers would look for as something that would complement their options strategies? What is it in our, what can we get some insights, for example, from our technical data, from our options data, that tell us why this type of movement actually might be something that complements that, and it's not actually something paradigm breaking? So I would argue yes. we'll take a look. So let's see, where's my clicker here? All right, got to get used to the bigger monitor now. Yeah, okay, so box tweet from Roaring Kitty. Somebody suggested, I think this is Chris Hoogstead, Hoogie Miles down in the chat there, suggested perhaps is this tweet a gift of a new trading box? Is it a new trading bracket in our options data? I never like to think that I'm exactly on the money to that extent with what Roaring Kitty is working on, with what Keith Gill is working on. Hey, maybe, right? Hey, maybe the gift is that we are now definitively moving into this $30 to $35 trading bracket that we've been flirting with for the better part of a month now. I would say that given what I am seeing in our data for today, that I'm reiterating what I stated on Tuesday, that this week actually is the best chance we've had, the best setup, the best structure we've had basically in 2.5 years for a weekly close above $30. And a large part of that has to do not only with our technical setup, but with the structure of market maker gamma hedging, where we have our open interest distributed along the options chain, and what that actually tells us about how market maker maximum profitability is drifting up to such an extent that they're transitioning to be able to be optimally profitable with closes in the lower 30s. So first off, right, obviously yesterday, weirdly, right over Christmas, we got this news report from Benzinga here, right, accusing Roaring Kitty of somehow pumping overnight trading, that this Christmas post somehow had something to do with him appreciating the price. A little strange, right? I mean, how is a retail trader really, before retail traders can even access the lit market, right? How are retail traders pumping up the price by over $1 when no one can trade, right? So what are they actually saying, right? Does Roaring Kitty, does Keith Gill somehow have the power to tweet at basically any time of day, regardless of whether the market is open or not, and cause buying? From where? From whom? Who is actually doing this buying? Who is seeing a Christmas Day market closure post of a box, of a gift wrap box from Roaring Kitty, and then going and buying, hundreds of thousands of shares to pump the price? Who actually can even do that? What people are is this Benzinga report actually even talking about, right? I mean, it really casts doubt on the idea that what Roaring Kitty's posts are doing are stimulating algorithmic reactions, or if it is stimulating algorithmic reactions, this is something quite new, right? Because this is suggesting that this is something like what we saw back in May, right? Okay, these posts are potentially stimulating algorithmic reactions between institutions at a time when no one else can see the price move, let alone actually purchase shares. This is a really interesting concept to see unfold. I'm not really exactly sure what's happening, but clearly Roaring Kitty, clearly Keith Gill is gesturing to something that is happening behind the scenes here, and perhaps is bringing to our attention the degree to which this is really not being driven by what he's doing at all. Interesting to consider. I've heard some other theories, right? Superstonk was out there today, some people saying, oh, maybe he is playing with some sort of behind the scenes algorithm stuff. Maybe he's dropping tweets at the time that some sort of swap transition thing is happening, where major institutions are rolling over swaps overnight, right? We do see, I think Ultimator has been pointing out, just there's all this settlement shenanigans that happen with loanable shares in very early morning hours between 9 or 10 p.m. and 3 o'clock in the morning Eastern time. So what's going on there? Does it have something to do with that? I'm not going to speculate too heavily, but I will say that even this big upward move, right, that we saw right out of the gates here, which is just a quick little pump, and now we're trading back to a pretty stable position right on top of, right on top of basically this $32 very high concentration call gamma accumulation, right? Basically very, very dynamic pump here right out of the gates. And then we overextend over the upper bound of this bullish channel that we've been trading in, this bullish regression channel, which is just below 34. And then right over this $34 historic resistance, historic support level that goes all the way back to 2021, 2022. And then big reversal, right? Immediately sells off, huge sell signal. We get, on a number of reasons, we're overextended past our channel. We've touched out of our channel. We've touched above this historic resistance level. And at the same time, what we see on our 4-hour chart here is, right, RSI overbought signal, right, extending above $70. In fact, we're still there, even where we are right now at $32.40 right now, is still in RSI overbought territory. So, right, most of this action kind of immediate right out of the gates, this big pop. Maybe this pop was something that was supposed to occur, overnight or something like that. We've been kind of hanging out down around $32 here. Maybe, right, we do have a chance to trade back up a bit, get a kind of maybe double top on this situation. What's interesting, though, is that even with this tweet, even with this X post, we're not seeing things that are breaking out of our technical paradigms here. So if we go back over to, well, I guess we can stay in Thinkorswim, see this nice and dynamically here. Right, so if we go over to our 4-hour chart. So basically, right, this is what we looked at, what we looked like pre-market. Still basically trading inside of our bullish regression channel. This move, although very dynamic, only kind of it nudged us right up here, right at the top here. Basically, we have this confluence of this historic level. We have this confluence of the resistance line at the top of our bullish regression channel. RSI overbought signal. As I mentioned right before I even saw this unfold, basically, if we were going to get the scenario, it was going to result in a very dynamic reversal. Now, we do have some sort of intra-trend recovery here. $32 has served, because it is a large gamma position, as something of a platform for this type of price action. It did stop. It did give a kind of support level, a firm kind of speed bump for something of an intra reversal, something like that. But basically, we're not looking at things that are challenging the integrity of our current paradigm. We've moved now into trading in this upper half of this channel, but we're not, we haven't broken this overall framework. So technically, this still looks like something that's controlled, right? It's bound within the options market. It's bound within our technicals. It's bound within what we would expect. It's still attempting to guide and offer some sort of structure to broader trader sentiment here. And okay, so why would this super bullish scenario have actually anything to do? Why would dealers want this, right? Isn't it that dealers want us to basically finish as low and as close to $30 as possible? Is it that, don't dealers just want the price to be super low all the time? And the answer is, well, yes, ideally there is a point in the options chain, right? There are marks within the options chain where dealers are relative bears. So usually, because GameStop is always, I won't say always, but generally pretty bullish, and broader sentiment on it is pretty bullish, right? Dealers are going to make much more money by drawing in euphoria, by sort of profiting from these intra-trend reversals where people get excited, buy tons of out-of-the-money calls, then the price reverses, the premiums on those calls all drop, and then dealers go ahead and pocket all of that premium at each occurring options expiry. So what we did see in our options data on Tuesday was this contraction of OI, right? We have in the money profit taking. We have some out of the money or at the money stuff. Now it's out of the money puts largely come on the board. Not a ton, but we are seeing this kind of gradual bump up in our max pain strikes. So dealers, as I mentioned, right, they are kind of setting up for trading in this new bracket by right, I guess something like offering attractive prices for this type of trading behavior to occur. Okay, why would institutions who are betting on this dealer strategy, who might want to see a finish as close to $30 as possible, why would a dynamic move upward actually help that? Well, as I mentioned, these technical signals also offer signals back down to the other side for a price reversal to take place, right? If you can organically allow that really dynamic move to happen to the upside, then you don't have to invest so much money in this kind of interventionary strategy to drive the price back down, right? We have seen that at certain points. We have seen a huge amount of short shares come in and say push the price down through technical levels, through major say support levels in technicals and in the options market. We've seen strategic order, I should say tactical order flow rerouting in order to kick buying demand out of a certain week, something like that. We may have seen some of that sort of delayed or internalized, authentic or organic buy pressure, right? Ask sentiment get filtered into some of our price action at the end of last week, right? Maybe that fed some of that, some of those VWAP orders that came in and started buying up shares in large numbers, right? Maybe it was something like that had to do with settlement. So we're not seeing that right now. Certainly not seeing that on the sell side. But by allowing this type of move to take place, by I don't know what this type of a stimulative intervention would look like, but certainly that this move has taken place, it sends plenty of organic signals that the stock has become overbought within this local time frame. So when we see those overbought signals, then the options market is going to go, this is about as far as I planned maximally for profit to accumulate in my trades, right? If you're planning on, you're a short-term trader, you're a swing trader, an options trader, something like that, you're saying, okay, well, I think maximally a bullish movement is going to tap out at around 34. If I see 34, I am diving out of my positions, right? And with good reason. So if you can make that happen relatively quickly, right, that price movement can realize, and then organic bearish sentiment can then pile in as traders jump out of their calls, as they sell calls. They make short trades in order to profit, like dealers would profit in that situation. And then other institutions, right? You say if you're a market maker, you don't have to go out and then short the shares yourselves in order to tactically push the price down. Other institutions who see that the stock has become overbought, within the trend, will go out and do that for you. So you don't have to risk, you don't have to take these risky capital exposure types of strategies, interventive strategies, in order to have things work out in your favor. That can unfold naturally. So basically what we did see here is that did involve very quickly. It did send those sell signals, as I outlined in my article today. We've seen some of this, and now, yes, we're going to see some. It looks like we'll see, based on the distribution of our gamma exposure, we are going to see a fair bit of very stable trading in this lower range. So we see it right now. $32 has jumped out at us here as a very large call gamma accumulation position. Almost 11% of all of our gamma across all current strikes is accumulated at that price level. We have a lot there. I think it's almost as big as 35. So in terms of call gamma accumulation, it's only smaller than 33 and 35. There's a lot of net call gamma there. So it's going to serve as a pretty strong floor, certainly intraday today, and we see it doing that. If we go back for a second and take a look at Thinkorswim, we can see that it is doing that. So just a quick kind of aside here in terms of recognizing what dealer gamma hedging does. So if we move over here, right, we can zoom in a bit. Right, we can see when you zoom up, it's a little zoom in. It's a little more difficult to see, but right, we can see how the price, right, just fell heavily. Right, just fell like a rock after shooting up, and then at 32, right, it just hit and then reversed, and then it kind of see how it kind of scrubs back and forth in here. Right, that's that low volatility. That's that kind of call wall, high call gamma accumulation property applying itself intraday. So that's market maker hedging kind of, okay, do we push down? It's then now right on top of that position, resisting these natural impulses within the trading day. So as that occurs, then what you get is some kind of mixed sentiment, right? Trades in different directions. Maybe you get some shorting to try to push it through, but right, basically what we saw is a little bit of a bullish imbalance, kind of take us back almost to VWAP, reverse back, and now we're still sitting on top of $32. So earlier in the day, $32 is definitely going to serve as that type of support. Maybe later in the day we start to see some weakness. Certainly tomorrow, as charm starts to set in, so charm, that's delta decay over time, market makers are going to be able to shed their farther out of the money hedges. That's going to apply some additional sell pressure as they get rid of their share hedges, right? As their deltas become smaller, right? As the negative delta on their books becomes smaller as a result of the charm effect, they are then able to take long deltas held in the form of shares as a hedge. They're going to be able to remove those from their books as they strive to remain delta neutral. So that's going to apply some additional sell pressure from this week's contracts heading into the end of the week. What it does look like, right, based on some of our delta levels right now, yeah, we've still got some pretty decent size. Oh, they're small, but right, things 35, 34, right? There's quite a few contracts. There's quite a lot of delta there that can be shed. And if they can drive the price below 32, which I imagine would be something they would maybe take a little risk to try to do, maybe try to anticipatorily sell some hedges in advance, maybe divert some order flow. The delta's really high on the 32s right now. So yeah, I think it's going to be difficult to see that close certainly below that strike today. Maybe we do again, right? Maybe things start to fall off later in the day, but 30, I would say right now, man, that's very difficult based on the number of contracts we have above that level, the amount of gamma exposure. It would take I'd say something like some serious shortable share creation via ETF creation orders, something like that. Hey, it's not impossible, but I would say that we've transitioned, right? Dealers have gone to the extent to transition us into this bracket that I think, collapse completely out of this bracket seems very low probability at this point, given where we are. Like I said, that doesn't mean they can't push us down basically as close to a $30 close as possible. But we do have so much call gamma accumulation at 32 and 31 even that that would take some time, and that would take some pretty decent bearishness for us. So yeah, I think for today, somewhat anticlimactic because it's already happened before the video, right? This is basically what I took some pains to write about pre-market in the article. Right, already saw this unfold here basically by the time I started recording. So I think basically from here, some more stable trading. Maybe we get some other kind of externality tomorrow, something that comes in and sort of reshapes, maybe something extra bullish that kind of has us close a little bit higher in the $30 range, the 30 to 35 bracket. But I would say conservatively expect a close somewhere lower than where we are now. And I would anticipate something like some efforts to try to get at least the 32s out of the money, possibly the 31s too. But at this point, a close below $30 would really take some shenanigans, really take some serious exposure on the part of bears. Not impossible, right? Like we've seen with some of these ETF type shenanigans, but certainly, as I said, I think the best chance we've had for a $30 close in a close above $30 in 2.5 years, something like that. So, okay, so what does this mean for us perhaps going forward? What does this mean for our price action? Yeah, I mean, this tells me we are still basically looking at stable trading within our range. Our close this week may determine where we go into next week. Maybe we end up using the midline of our bullish regression channel as something like a support. We'll have to see where we move into the next couple of weeks. But that midline is gonna come pretty close to $30 heading into next week, heading into our first options expiry of January. Maybe we get some bearishness that attempts to push the $30 position again out of the money, but I'm not as worried about that, just because I don't see the same amount of accumulation of open interest, let's say, at future options expiries. So our open interest, for example, for 1-3 at 30, I think we've got less than 10,000 contracts. It's so low, right? Our open interest on the 30s for next week is just over 3,000 contracts. So, right, do I have that right? Yeah, it's just over 3,000 contracts. It's pretty low. So while this might go up, right, we might get some call sales or something like that. heading into our close this week. If $30 transforms out of this huge call accumulation strike, and we see calls, as we have seen this week, start to accumulate at strikes higher and higher, at 35, at 40, at 31, 32, 33, something like that, $30 is going to serve as less of a critical strike to have close out of the money each week. So I think based on this week's price action, we do see that type of transformation heading into at least next week. It'll be interesting to see what today's buying patterns look like, what Friday's buying patterns look like as we head into next week's trading. If we do get some major shenanigans and get shorted with a bunch of shares manufactured from ETF creation orders, maybe we go below 30 and then 30 becomes a popular strike again. But remains to be seen. I would say for the rest of today, heading into tomorrow, we're still looking at this stable trading in the lower 30s range, in the 30 to 35 bracket. And we're looking at a continuation of our bull trend playing in these two halves of this channel, and that we are more or less now back on track as we were. Heading into Thanksgiving. So we had this month of consolidation basically from the beginning of December to the end of December following the Thanksgiving holiday. We're now back on track and more or less trending up accordingly as we were then. So this over $34 test is basically in line with what we would have expected from that point earlier in this trend. So thanks very much, guys. Thanks so much again for your patience today in getting over some of these technical difficulties, getting the new setup going. So thanks very much. Again, if you would like to access today's article, just like every day's article, right, make sure you check out the link in the description or the post up at the top of the page, right? I post these analytics every single day pre-market. So if you want to have this insight, if you want to have an in-depth and structured view of what I think is coming up for each trading day, then do go ahead, follow and subscribe on X, check out those write-ups. And join us again tomorrow for another daily breakdown. Let's see what we are looking at for an options expiry. So thanks very much for watching and listening. We'll see you next time.